Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. It's been a while since we've done a trade on Bitcoin. I've been looking for a position of strength and here we go, I finally found it. I'm going to let you know where I'm going to be entering, where is my stop loss and where I'm taking profit and leverage size, all of that and more, and of course why at this moment in time I believe this is the position of strength to trade from. So I just posted this over on my Discord. I do always recommend, if you do want my trades in live time, come and join the Discord. The link is down below in the description of all of my videos. I've just entered a 5x leverage short from 16,500 with a profit down at 15,200. And my stop loss is just going to be a standard liquidation. I'm not running a stop loss on this trade. So let's talk about what's going on and why I'm entering at this moment in time. So the main reason is actually outside of what's going on in Bitcoin. There are a few concerns that I do have about Bitcoin and why I do believe it's going to break down, but we'll go through these one by one. So if we do start off on the daily time frame, you can see something very, very reminiscent of a bear flag is playing out at this moment in time. On the 1 hour time frame, we have just broken beneath the floorboards of this, and we're currently retesting this trend line as resistance. Now, even if we do push up a tiny bit further, I do believe that we're going to start rolling to the downside, mainly because of the reason in the S&P 500, which I will be talking about in just 1 second. So, like I said, 16,500 right here, I have entered my trade. Where am I going to be taking profit? Well, I'd love to run this trade all the way down to 14,000, but I'm a conservative trader, so I will be doing something a little bit more conservative. Drawing my Fibonacci's on the daily time frame from this low up to this peak, I see a beautiful 2.36 Fibonacci at 15,100, and I'm going to be taking profit, front running this Fibonacci at 15,200. This is where this green line down here is where I'm going to be taking profit. So on a 5x leverage, this is going to be about a 8% drop, meaning about a 40% profit on this trade if we do rush to the downside. I will update you as I do believe the price is going to start breaking to the downside very soon, and I will update you with a new stop loss as we start breaking down, so we are stopped out in the profit, worst comes to worst. So there you go, there's my trade. So why am I taking profit down here? Well, there's a few other reasons why I think we're going to ping down to this level. Like, we're sitting on the 1.236 Fibonacci, we've held this once, twice, 3 times, and now it looks like we're going to be heading back down to this level as we're breaking down from the bear flag. Now, you can also see a touch point here, here, and potentially we could come down to here, 14,800. We could also come down to this 2.36 Fibonacci at 15,100, but of course, like I said, I'm a very conservative trader. I always like to make sure I'm front running the market and taking profits before the rest of the traders come and take profits, before that bounce obviously happens at some point. So 15,200 is what makes the most sense to me at this moment in time. So there's the TA reasons why I'm going to be shorting at this moment in time. You can also see EMA ribbons are getting quite tight, and we've just completed a reversion to the mean. So it makes a lot of sense to me just looking at the technicals why we should be breaking down. You can also see on the oscillators on the daily time frame, the squeeze momentum indicator has been flipping bearish for a while, and we're pretty neutral right now on the squeeze momentum indicator. Like, we're flat in bearish territory, but we can get a lot more bearish from where we're at this moment in time. And considering how it's only really starting to flip considering how it's only really starting to flip bearish as we're so close to the heart line, I think we've got a lot of room to move down after we do break this bear flag. Over on the MFI, the money flow index, basically looking at the relative strength of the market and also looking at liquidity conditions. The reason why I never have, volume over on my screen is because I like to look at the MFI, and this tells me everything I need to know about the volume and also the RSI without having these ugly volume candles over on my screen. So you can see quite recently we came up to this trend line, and we're showing extreme weakness right now for the MFI. We're turning back tail and it looks like we're heading up to the heart line, around about 50 as we are kind of consolidating at this range. But all in all, we're sitting at 40 for the MFI right now, so it makes a lot of sense that we should be heading back down very, very soon. We've also recently flipped bearish on the stochastic RSI. We pinged back up and retested one of these moving averages, the blue line, almost crossed the orange line, showed weakness, and now it's heading back down to the downside. On the weekly time frame, you can actually see blue line is capitulated beneath the orange line, meaning stochastic is calling for another macro weekly time frame breakdown to the downside. If we get rid of these and look at Let's draw from here. If we look at the weekly time frame for the MFI, this was one of the major reasons why I've decided that I'm shorting, and I'm going to tie this in to liquidity conditions in the stock market in just 1 second. You can see for the MFI, we've we had a peak over here, and this was also correlated to a double top. And then after then, boom, ran into the trend line, boom, ran into the trend line. We've broke down. And on the weekly time frame, so not the daily, the liquidity conditions on the higher time frames are actually quite overextended. We're approaching the heart line right now. And the last time we approached the heart line, we got rejected from it. We were trading at, this was a while ago. It's been a while since we've come up to the heart line. I have to scroll very, very far. It was the 2nd of May. The last time we came up to the heart line, we were at 39,000. And from 39,000, we broke down about 55% or so. So, you know, me predicting an 8% drop from where we're at this moment in time based on these oscillators, based on the technicals, is really not out of the pocket. And also on the weekly time frame, you can actually see stochastic RSI, or sorry, not the stochastic, squeeze momentum indicator is flat in neutral territory, and it looks like it's gearing to push back down for another bearish move to the downside. So also, if we're looking at the higher time frames, you know, we talked about this quite recently, but we've had a liquidity grab. If we look at the volume profiles, there was a decent amount of volume traded here. We grabbed liquidity, and now we're turning back down to the downside while we are, of course, forming this bear flag that we've just broken down from. You can see there's no volume traded until we get down to 16,200 or so. But the majority of volume for the next cluster to the downside is actually about at 15,500, 15,600, which is of course quite a bit higher than the take profit. So I do still think that we will fall through the floorboards of this. We might reside round about this level for a little while. I'll of course keep you up to date while this trade is running. Active addresses, another reason why I'm shorting is the active addresses are heading up very, very harshly. And if we're looking at Bitcoin, obviously you can very, very clearly see these have a very linear positive correlation between each other. Active addresses take a run to the upside, and this correlates to tops in the price action for Bitcoin. I also do have some concerns with the hash rate taking a massive plunge to the downside quite recently while mining firms are becoming insolvent, but I'm going to make a separate video about that, or rather, I've already made a video about that, but I'm going to post this trade video first. Over on the E-mini futures, if we're looking at the S&P 500, today is the last trading day for the year. If we're looking at year-to-date returns, I've also talked about this in another video, so if you want to pause the video and look at the year-to-date returns for these markets, really, really not looking good coming into the last trading session. And if we are looking at the E-mini futures for the S&P 500, you can see we're currently putting in a diamond formation. And why do I think that we're not going to break to the upside of this diamond formation? Why do I think that we're going to break through the floorboards of this diamond formation? Well, let's check out the liquidity conditions for the E-mini futures in the S&P 500. Can liquidity support a new uptrend out of this area for the S&P 500? I don't think so. If we're looking at the past month to date, we're looking at what's happening in the past month for the E-mini futures contracts, basically looking at the liquidity book depth, how much money is in the markets in layman terms. How liquid is the market right now? The market is relatively liquid. A lot of new contracts have flown in, and you can see, you know, on the 29th yesterday, there was a huge increase in asks and bids as liquidity conditions started to push back up for the S&P 500. And if we're coming over to like a year-to-date picture, a little bit more than year-to-date, December 1st to December 29th. So basically just looking at the past year. I've also made another video about this that I will post a little bit later in more depth, but you can see, you know, liquidity is very overextended right now. You've got a very linear downtrend in terms of the mid price, and with a lot of these times where liquidity conditions top out, we break down and have a buyback before that next meltdown. Mid price tops out, breakdown, buyback before the next meltdown. Mid price tops out, breakdown, buyback before the next meltdown. And over here you can see we've had this double top in the liquidity conditions. We've broken down, and it's hard to see when we're looking at this. When we're looking at this type of area over here, because we're looking at the past year to date, but it's very clear to see if we're looking at the past month to date, liquidity conditions are once again very, very overextended. And if you don't know how these liquidity conditions affect the market, I talk about this all the time on my channel. This is one of my favorite charts, looking at how liquidity conditions affect the S&P 500. This is how liquidity conditions affect the market. So on the year-to-date time frame, we talked about how we topped out. These blue vertical lines mark the tops in terms of the liquidity conditions for the markets, and as you can see, top in liquidity, breakdown, buyback, final meltdown. Top in liquidity, breakdown, buyback, final meltdown. Top in liquidity, breakdown, buyback, final meltdown. Top in liquidity, This was a deviation fake out. We didn't have the liquidity to support this move. So this is how we knew that this was a fake out, because liquidity conditions had already topped out. This was very, very quickly pushed back down to the downside. But as you can see from here, we've broken down. We've had a small buyback. We've kind of been consolidating. And yesterday on the daily, you can see we had a pretty sizable buyback to the top of this range, and we got rejected on the 4-hour time frame. It does look like we're struggling. It looks like we're consolidating. Liquidity conditions are overextended. So yes, while I have been talking about Bitcoin, and while I have been showing you that the Bitcoin chart, in my opinion, looks like it's getting ready for a breakdown, the main reason why I'm shorting Bitcoin at this moment in time is because what the greater markets are telling me. I've also recorded a stock market update, which I will post later. So if you want some more insight as to what my thoughts are for the stock market, what my thoughts are for the bond markets, what I think is going to be happening coming into 2023, and really, looking at the general markets and looking at, liquidity conditions in general, a bit more extensive analysis on markets outside of Bitcoin, I will be posting these a little bit later on. But these are the main reasons why I'm currently entering a new Bitcoin short. Remember to manage your risk. If you use 100x leverage and get wiped out, it's on you. But nonetheless, as always, it's been your boy Cowboy Trades. This is the next Bitcoin trade that I am entering. Of course, this is not financial advice. I'm just letting you know what I'm doing in these markets. I'm just giving you an idea of how my brain works, how I navigate, how I understand these trades. I've been sitting on the sidelines and waiting for a Bitcoin trade for about 2 months. The last trade I entered was over here, and as you can see, this was 30% profit secured. All of the Bitcoin trades I've ran on this channel, they've all ended up being profitable. In fact, every trade that I've entered on this channel and over on my Discord has been a profitable trade. I do believe this is the next profitable trade for Bitcoin, and the reason why all of these trades are very profitable is because I have no problem sitting on the sidelines for 2 months, 3 months if that's what it takes, waiting for a position of strength. And now I see another position of strength revealing itself, and this is why I'm entering the next Bitcoin trade. Best of luck, my friends. As always, if you do appreciate the content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you do want further updates on my channel, if you do want on-chain metrics, if you do want economic data, if you want charts that don't make it onto my channel, and in-time news events that I do see in the markets, which I can't post straight away over on YouTube, be sure to head over to my Twitter at 618_cowboy. And if you do want to keep track in real time what I am doing with my Bitcoin trade, if I'm putting in a new stop loss, I will of course post it over on Discord first, because it takes time for me to load up all these charts, to think about what I want to say, to record the video, edit the video, title the video, thumbnail the video, post the video. These things take time. So please, of course, if you do want updates in real time, be sure to head over to my Discord. If you come over to my channel, click on the About section. You can see my Twitter, Discord, Instagram, and official merch are all linked down below. Alternatively, if you're watching this video, you can head down to the description and it will be linked down there for you. So that's all I've got for you for this video, my friends. As always, it's been your boy Cowboy Trades. I'm out. Peace.